Comment below. Let me know that you were there. I'm just curious to see how many people we can have on this live. Uh, so I see someone here. That's cool. So one person. Awesome. That's great. We'll see how many people we can get. Because on Friday, on Saturday, I'm not sure. I couldn't do one yesterday. I'm doing one today. I will see how it goes. Comment somewhere if you're watching this now. And two things I want to do today. First thing is I want to do a quick Q&A. So if you have any question about trading, post them below. Second thing is I want to talk about price action. And price action is a big topic. Right? People want to hear about it because it's something that some people talk about, but maybe not enough. And what I found with price action, this is something I've been reflecting on in the past couple of weeks, is that some people want to trade price action because they hear about price action only. So they want to trade pure price action because they hear price action is the only thing that's right in the market. So people want to go only with price action and do nothing else. Now, this is interesting because I think people are making it way too complicated to trade only price action. They're putting way too much pressure on themselves to only trade price action because they hear about price action in a few blogs or somewhere. While if you think about it, indicators are nothing wrong, right? If you know how to use them. And I've talked with people this week who wanted to trade price action, and they put so much pressure on themselves that they ended up not being able to trade at all. They end up making too many mistakes because they don't have any indicators to confirm their setups. So it's good to want to focus a little bit on price action, but if you're gonna put too much pressure on yourself, you're just gonna make it harder for you to trade, and it's not gonna be a good idea necessarily. So the way I look at it is, yes, I take price action in consideration. This is the first thing I look at. I have some plays, some strategies that are only price action, but I always want to complement with indicators. So I always want to confirm. And indicators are super useful when you know how to use them, right? If you put moving average in your chart, it's much easier to see the trend than if you're just gonna look at the chart and try to identify the trend, right? It's gonna make a big difference. But the way you're gonna look at it is really gonna help you out with this. So I'm curious among you guys that are present now, how many of you guys use price action in your trading? So price action without candlesticks and possibly the candlestick and structure points. Because I see price action as being the candlesticks and support resistance. To me, it's the same thing. This is price action. So let me know below in the comment if you use price action when you trade. Then I can maybe give a few tips about how I use it and stuff. So let's see who we have present here. I have a few people. Wonderful. Yeah, so I got a few comments about a training I released a couple of days ago. I do. Cool. What's up, Mary? Nice. So, yes, Mary, I'm pretty sure you'll be watching the training pretty soon. But I do have some plays that are price action only that I like to use. Okay, they're enough reliable. But one thing I read in a book recently, and that was pretty, like, that was something I thought, but I just had the book confirming it recently. I'll try to pick the book here. So one thing I've been reading recently in a book, and it's that book right here. It's called Universal Principle of Successful Trading. Okay, I came across this recently, and one thing that is out in that book is that the more, like, the less thing you'll have with your strategy. So if you're gonna trade something like pure price action, okay, it's gonna work, but probably the drawdown you're gonna have are gonna be higher because you have less confirmation. Okay, so it's something that people think they can trade only price action alone, and I think it's possible. I think it's totally fine. but you have to be ready to accept that you'll have maybe a bigger drawdown. And the periods where you have less profit are probably going to be more frequent. Right? This is something people don't think about. They think that trading only price action is going to make them successful. It's going to, like, it's the only way to go. But the drawdowns and the probability of like having bad month is higher usually because you have less confirmation. You don't confirm as much, and you're more likely to make mistakes. So if you look at a chart and you look at the structure points, how price is moving, it's good, it's fine, but you're more likely to make mistakes because you have to interpret price. While if you're gonna go with indicators, it's much more easier to have rules. Say I'm gonna buy when the RSI is above 30. I'm gonna buy when the RSI is above 70. Alright, this is much easier. You see it on your chart clearly. But when you say I'm gonna buy when I see an engulfing candle and I have a trend that's strong enough, well, what is strong enough for you? Is it just a little bit what does that mean? Is it just like, do you need to have space between the moves, so between the lows? You need to have some space, or you need to have some big candlesticks. So it's really going to be subject to interpretation all the time. So that's why I like to combine price action with indicators. Okay, so two things. And I'll first look at price action because depending on what's price action doing, I'm gonna use a different indicator. Okay, and I'll just try to see if I have this. But I did a checklist for my academy, and the idea of that checklist is that depending on the market phase you have, you'll use a different indicator. If depending on what situation you're in, if it's a trend or sideways market, you're going to use something different in your indicator. Okay, so if we're going to be sideways, and this is basically what the checklist says, but if we're sideways, you might use the Bollinger Band or the RSI. Those are the two I think I talk about a lot. If we're trending, then you're going to shift to moving average. You're going to use something different. And depending on that phase, so as I said, you're going to use an indicator that's different. And the setups are the same. But so many people make mistakes of using like the RSI in a trend. They're going to sell when it's overbought in a trend. Okay? Or they're going to buy when it's oversold in a downtrend. But this is not the way it works. Because of course the RSI is going to be oversold when it's a downtrend. Right? People are selling. It's normal. It's going to be oversold. And of course it's going to be overbought when it's in an uptrend because people are buying. People want to buy. Okay? So it's a big difference. And if you're going to look at, just as an example, if you look at the RSI after like a big news has been announced, right? So let's say on last Friday, and I'll try to pick an example. Give me a second here. I'll try to see if I can. Yeah, I can do this. That's pretty cool. So I just need to make sure that you guys see my screen, and I'll just pick a quick example here to show you guys. Okay, this is pretty evident. It makes sense, I think. Let me try to put this up here. And we'll take a quick example, but we had some big news last Friday because of the fact that the NFP were released. Okay. Hey, what's up, Joan? I just saw you coming here. Yeah, Joan watched the breakout module. Nice stuff. Nice stuff. Okay, cool. So I want to make sure that you guys can see the chart. I think so. If you guys cannot see the chart, let me know. But it should be loading by now. I think I may have a delay here. Cool, okay. So the chart should work by now. I'll just put it full screen so we can see a little bit better. And what I want to show you is really quickly, okay? And we had basically two examples of this last week. Okay, so like the first one is this. We had this uptrend on USD CAD, okay? And then because of the NFP, right? NFP released 8:30 a.m. Eastern time on Friday. We had this big drop. Now, Of course, after a big drop like this, price going to be oversold, right? That's normal. We have to expect it. But the thing is that after news like this, I would not necessarily use the RSI. So in that case, it works pretty great because we stopped, we consolidated a little bit, and we went back up. But see how this here is a consolidation. This is not a decline. So you guys in the academy know what's the difference, okay? When you have a downtrend, we're gonna see it as a trend, but here's really a consolidation. So in that case, yes, you could use the RSI because it's consolidating. But if you're gonna be in a downtrend or an uptrend, you don't use the RSI. Here, it's another great example because we went up, so this is an uptrend. Here I wouldn't use the RSI, but because we're at the top and we're consolidating, the consolidation plus the RSI being overbought, that's a good example. That's a perfect example because then you're more likely to sell because you had this consolidation. But if you're gonna be, I'll try to pick an example. Well, here, okay, here you're in the uptrend, so uptrend, always making higher highs, one high, and a higher high here, and go back up. So here, there's no way you could use the RSI because you're in the trend, and you're basically gonna notice that when you're in a trend, the RSI is gonna be above 50 most often. Okay, if you're in an uptrend, if you're in a downtrend, the RSI is gonna be below 50 most often. So I'll just try to pick a. I don't know if I can add a quick limit here. No, I can't. Yeah. Yeah. But we'll just try to figure this out here. I'm gonna put the limit at 50 on this chart. This is about 50, let's say. Or I'll just put it more clear. There we go, 50. And if you guys have any question, comment on the post here. Let's take a quick look again. Okay, so definitely John was pretty happy with that. Great stuff. Yeah. So we're getting back to the chart. I just put a line here at 50, and I want to show you how the trend you see on the chart is going to impact how the RSI behaves. Okay, right here we're in an uptrend. RSI is above 50 most of the time. Now we will really below 50, okay? And here we will go back up, but I don't know if I can pick another example. Because this pair has been in an uptrend pretty often. Try to see if I can take another pair. Happening here. Okay, let's say we go with this because we are probably gonna have strand on pair here. I'll just put my line at 50. And I'll show you guys that here we're in the uptrend, in an uptrend, right? So we're most often above 50. See how here we're above 50 here for half the time and below 50. Okay, so it's kind of more sideways here. We can just see it in the chart. We have this low. So put this here. We have this low and pretty much the same low here, sideways. Okay, above 50 here for half and below 50 for the next half of the move. Here we are moving. Well, here we are moving between the two like all the time. So we're really more sideways. And if you can take an example of like a downtrend, like this nice downtrend, here we're a lot more below the limit here. Okay, from this point, this top, you just take this top, and go to like this bottom here. Okay, we've been pretty much below 50 all the time, except this big high and this one here. The rest of the time we're below 50. And the point is that here, if you're gonna be below 50 most of the time, and you're gonna buy when it's below 30, right, as an overbought signal, you're not gonna have any chance because you're always below. You're always in the downtrend. So understanding the context of the RSI is really a big key here. And I'll be honest to say that I don't look at this often. I don't look at really where the RSI is, but I'll first look at the chart. Are we sideways or are we in a trend? That's going to be the first step. And this is why you have to first figure this out before using an indicator. Which market phase are we in? Whether it's sideways, trending, consolidating, or basically to the downside, a decline. You have to figure this out first. And I'll just go back to here. Let's go back to this place. And do you guys have any question about this stuff? Is it pretty clear, or do you have any question? I'll try to ask you guys. Yeah, if you have any question, if you have any comment about this. Yeah, cool. So I see, Joan, you've been through the training already, which is pretty cool. Nice. Yeah. Just to discuss quickly a little bit, we had this big drop on GBP USD last week, and I really want to make it, well, on all GBP pairs last week, and I really want to make sure that you guys get the lesson. Okay, that if you don't trade with a stop loss right now, you're completely missing the point, because these big drops are much more frequent. Okay, they're gonna happen more and more and more, and we had one not that long ago, like 2 months ago, I think, and we had another big one. Well, so we had a big one with Brexit. We had one 12 months ago too, and we had one also, a big one in well, maybe a year ago. Okay, but you have to make sure to use a stop loss, because having a move like this, okay, if I just did the quick calculation, and if you were trading one lot on GBP USD like that day, you would be down $6,000, okay, in a matter of like 5 minutes. So if you don't use a stop loss and you just watch your PNL move that fast, well, you're gonna scream. You're gonna be like disappointed, and you're probably gonna wonder why. So using a stop loss for me, like, it's non-negotiable. It's like a rule. Okay, there's no way I'm gonna put a trade without a stop loss, because those things happen. They can happen in the future, and you never know when they're gonna happen. Okay, there's many reasons why it could happen. Some of the reason discussed for this for this recent event were simply the fact that someone made a mistakes while placing a trade. Okay, that's pretty stupid, but it's a possible reason, right? Right? Someone can make a mistake in the bank, hit this big drop, came back up a little bit after, but you never know, right? You never know. It could go down even more, and you don't want to take the risk of being in a trade without a stop loss. So as soon as you enter a trade, and on most platforms you can do it like at the same time. You enter a trade, you set your stop loss. I know that for I think some brokers, you have to kind of do two orders, so like one for the entry, one for the stop loss, because that's the basic, right? It's like two orders. But if you can put it at the same time, just do it. Just just do everything at once, because it's much easier that way. And that's reminding me, I was just writing an article this morning about it's going to be the article published next Wednesday. And I didn't have a good week of trading last week. I finished pretty much flat. It was just not bad, but not great. And the thing I talked about is pretty much the process I go through every week to kind of review the week, to analyze the week, how I did. And I was thinking about that past week, what I did great, what I did not great. And I made a few mistakes in the past week, to be honest. So I was kind of doing everything. And I did great things. Like, I had my plan, I had my schedule, I respected the plan. But so many times I saw great opportunities to trade, I was prepared to trade them, but somehow I had to kind of wait before entering, and I missed like probably 3 trades like that. Yeah, and the reason why I think I missed those trades is all because of sleep. I didn't sleep enough last week, and you're gonna see how big of an impact sleep has on trading. Yeah, I know that the weeks where I'm gonna sleep like 5 or 4 or 5 hours a night, and it happens. Like I have a pretty busy schedule, so it happens. But those weeks are gonna be much less profitable than the week I sleep like 7.5 hours or 8 hours per night. And when you can understand this principle that sleep is important, you're gonna see that the days you sleep more, you're much more. Yeah, that you're much more like not only awake, but you're much more. You can focus a lot more, and you're gonna be willing to do things that you don't do normally. Okay, so when I sleep less, I'm much more impatient when I trade. When I sleep less, I'm much more likely to not follow the rules. And this is pretty funny because one, like me and another trader here in Montreal, we have those meet up every month. And we go out at night, we talk with other traders, we do some workshops, and we often come back late. And the funny kind of habit we have is to force yourself to trade the next day, right? Just to see how we perform. And this is really how and when you're gonna see how much of an impact, or I would say this is really when you're gonna see how prepared you are to trade. Okay, how you've done your homework before trading. Because when you don't sleep enough and you come to trade the next day, it's kind of a challenge to see whether you have the tools in place to make sure that you follow your plan. Okay, so if you have a checklist, if you have a journal, if you have all those processes, make sure that you follow the plan. And of course, those days we're gonna make mistakes. It's inevitable. It's normal. But we want to see how much we are prepared to trade for that day. Yeah, did we really prepare ourselves to trade? Or did we just go to trading and like screw up everything? Because if we make many mistakes, it's sign that we're not prepared, that we didn't take the time to do checklists, to do a plan, or to do like trackers of discipline. But if we are making only a few mistakes and still perform well, it's a sign that we have put the right things in place and that we know what we're supposed to do. So it's really a big importance here. And let me know, guys, if you have any question. I'm just discussing pretty much anything now. Um, yeah, this is interesting, Joan. Uh, oh, okay. A couple of things here. Okay, so a couple of questions here. Nice. I'll go with Joan first, who had a question. Joan asked whether the stochastic can be used or it's only the RSI for breakouts. And this presentation, I did it one time in person, like a workshop that I gave here in Montreal, and I got the same question: should I use the RSI or the stochastic? And like, there's no clear rules for that, but those two indicators are pretty similar to me. Okay, they're pretty much saying the same thing, whether the buyer's on control or the seller's on control. And what I noticed is that since the calculation of both indicators are different, I found that the stochastic is going to give more signals, but maybe a little bit more bad signals. Okay, the RSI is going to give less signals, but they're going to be more reliable. So whether you want to use one or the other, I always use the RSI because I figure out it's more simple. I just prefer it that way. But whatever you're gonna use, you're just gonna have maybe more signal with the stochastic, but it's gonna be the same principle. Okay, there's like it's pretty much the same thing. So pick the one you want, but just test it for yourself. But to me, it's always the RSI. That's a clear answer. But it's definitely gonna give you good guidance for sure. Okay. Um, very clear. Yeah, yeah, sure. What do you do if on a 5 minute chart? This is Mary. What do you do if on a 5 minute chart it's trending, but higher time frame is consolidating? Yeah, two ways of seeing this. If you're gonna be trading intraday, mm, I think it's always gonna depend on how big is your range. vary. So if like, and also it's gonna depend what time frame it's consolidating on. So if it's consolidating on the 1 hour chart and you're trading a 5 minute chart and the range is big, well, it's not that bad. It's not terrible. Okay. And usually you're gonna see it on the 5 minute chart. How big is the range? Yeah, and if it's consolidating on like the daily chart and you're shooting on a 5 minute chart, well, I think it's still fine because you can still have some big moves and big acceleration during the day. But if it's consolidating on kind of 15 minute chart and you're trading on a 5 minute chart, well, maybe just stay away, okay? Or if you want to trade sideways, it's fine, right? If you want to take sideways move, it's totally fine too. But I try to focus a little bit more myself on just one time frame, like just a 5 minute chart. But I'll look at the big picture, so I'll step back a little bit, scroll away from the chart, and look at the big picture. If I see a range, well, I maybe won't trade. But if I see that the range is really large, I might trade anyway if I see kind of a trend. Because we do have to go from one limit to the other, so I may have enough room to trade this. Yeah, but it's always going to depend on the situation. And the best thing I could do now is probably to find an example. I'll just try to see if I can find something here. Oh, we did have some example with the Euro USD for sure. And usually the moves are going to be smaller if you're sideways on a bigger time frame. Okay, but you can always make money that way. And I know some traders that are going to wait to have a clear trend on like every time frame. That's fine, but it's going to give you less setups for sure. And I do have a good example here on Euro USD. So I'll try to show you what's happening. Let me change that here to give you the screen. All right, this is Euro USD, and I'm on a daily chart now. Okay, as you can see, clearly it's consolidating. Okay, clearly. Okay, we do have this consolidation that's happening right now, but the point is that if you're gonna go like on a, and I'll just go back time frame by time frame. If this is the 4 hour, we're consolidating on 4 hour, 1 hour, 2. Okay. 30 minute, we're kind of in a downtrend, but not super strong. Right, we're coming back and forth, almost sideways. 10 minute chart, kind of weird. And what you'll see is that on a 5 minute chart, like intraday, you can have some big moves. Right, you do have some big trends. Okay, so you just have to know what are the limits of your move, and those are the limits on the daily chart. They're pretty much the main ones. But once you can identify the limits, then it's really easy to trade between those two limits. Okay, so now I know that if I'm gonna enter like a long trade here, well, I probably am better to get out around here. Okay, so do I want to enter at that level or not? Well, that's the question. And right now, of course, it's not moving because it's the weekend. But same thing is going to be here. If we go back up to this level, okay, even though it's a consolidation, I can still try to enter a trade to go back down. That would be still a big move. Okay, so and this is gonna be I don't know you in the academy, right? This is gonna be a module I'm working on now on the multi-time frame analysis, because I love to look at many time frame like this and trade multiple time frame. But you're gonna see that what you have on one time frame is usually gonna be different than another time frame. Okay, and this is like another topic here because we're talking here about trend trading. But most of the time, you can have one thing on one time frame and a different thing on the other time frame. Okay, so I'm gonna try to think about this. So let's say that I think we had a good example in Euro JPY. And guys, let me know if it's clear or not clear. Okay, I do want to make sure that you guys understand. But this pair right here was at resistance zone, recently, even like on Friday. Okay, the resistance zone. Now, as you can see, what is the market phase here? Well, it's kind of consolidating, right? It's not really moving a lot, so we could say it's a consolidation. Now, consolidation on the daily chart, but keep in mind that it's at the resistance zone. And if you go down a little bit here, okay, this is pretty much an uptrend, right? This move right here, uptrend, and this is still the uptrend. Now, if you go on the 1 hour chart, okay, you have this uptrend, right, as we identified, but then you have consolidation, right, forming a double top, and then you have a break, so breakdown. And this is a downtrend because you have one low here, a lower low, a high here, and we seem to be making a lower high here. We'll see what happens, but let's say we're making a lower high. This is a downtrend here. And if you're going to on 30-minute charts, probably going to be the same thing. Yeah, so double top, downtrend, and yeah, downtrend. And if you go here, same thing. Here, pretty much the same thing, although it's a little bit missing the 500 chart. But you get the idea is that one time frame that you have a sideways market, it's going to be trending in another time frame. Okay, and if you're going to be consolidating here on a 5-minute chart, you might be trending on another time frame. Yes, you want to see what combination you can have, and the combination are going to help you decide what type of trade you want to take. Okay, so there's two ways I would trade this. Either if it's sideways on a daily chart, I might want to look for a breakout and then a trend on a lower time frame. And if it's gonna be trending on a bigger time frame and consolidating on a small time frame, I may look for a breakout in the same direction of the trend on the bigger time frame. So I would enter on the lower time frame, have a really small risk, and then a big reward because we have a trend on the daily chart. Yeah, so it's something to keep in mind. But yeah, let me know if it's clear for sure. And guys, let me know if you have any other question, but I'll have to go pretty soon. It's already 1:10. I have to go downtown this afternoon and it's rainy here. So uh here let's okay. It looks like you guys don't have any question. If you do, just take a look quickly again at post. What's happening here? Okay, so Mary got it. Cool. Yeah, and I think John said it well. Stop loss is a priority. Totally, absolutely right. Yeah, you have to have the stop loss, and I'll keep repeating it as long as people don't get it, because some people will never get it. They're always gonna trade without stop loss because they hate being stopped out, or they don't want to have this rule under trading, and people have to learn. And the question is, because some people I believe really have to have big problems like this to get the lesson, right? And I think it's part of trading to get those lessons. I think some people won't learn unless they have the lesson, unless they lose their whole account, or unless they blow up, right? But you have to, yeah, you just have to take the lessons like this. And it's unfortunate, but that's how great traders are made. I didn't talk with a lot of traders that just went from the beginning with an account, then went straight up. This doesn't happen. So people have to go through tough times, but that's how they learn. So guys, I want to thank you for being on this live event. It's been a pleasure to answer your question today. And I'll try to do one next Friday, as always. Okay, this one is exceptional because it's on a Saturday. But the Q&As are usually going to happen on Fridays. And feel free to join. Check out the Facebook group if you're not there. It's artitoy.com/group. The short URL to get there. And I'll see you pretty soon. And for you guys in the academy, let me know if I can do anything to help you out. If you have any question, let me know. Send me an email or shoot me a message here on Facebook. I'll do my best to help you out. On that note, trading, keep improving. Check out the podcast on Monday. It's gonna be a great one. I just edited it this morning. Just look at everything this morning, and I know it's gonna help you out. So check this out, and I'll see you pretty soon. Ciao.